What I see around the world, and I've done many interesting things in my life, but having carried money to Oman and settled it in cash is not one that I've done. I hate cash with a vengeance, as in carrying cash, but I love liquidity at the same time as an investor. Um, that being said, I think where it is important for all of us to understand is when the world changes and is different from what we have seen over the last 50 years or 60 years in terms of geopolitical uncertainty, uh, policy risk, um, um, significant movement of capital across industries into new industries, including AI capital deployment, behemoths racing behemoth IPOs, and then the parabolic move of markets across the board, which are subject to severe shocks at different points in time, as we have seen, and significant recovery soon after. I think it becomes clearly important that capital allocation and therefore the utilization of capital across the board becomes significantly important. Like Dr. Bhaskar mentioned, if somebody's keeping their cash in non-yielding assets or cash flow or currencies, unless they're doing it with a view to protect their unending requirement for liquidity away from the US dollar, like in a Swiss franc, which doesn't pay anything at all. If you put it in a geography that cannot be extracted in the future, it is a significant mistake in sweating your own capital. What I would say is that more and more we are moving away from this concept of free trade. Bilateral trade is now becoming more than a B2B, it's becoming a G2G initiative. I think all of us need to be cognizant of the fact that the stable coins are here to stay, and they will actually provide us a significant method to interact, initiate, trade, record, and then in the future also analyze the transactions with much more clarity than we have seen in our previous 50 years. And this clarity will bring about efficiency and improvement in returns for everybody across the board. So in the past days, when we used to sell products in some countries in Africa, it used to be completely impossible to take the currency out of that geography. If we now move into a stablecoin environment, for example, that risk is significantly minimized to the extent that we can deploy this capital across the board now. And the way things are moving, I wouldn't be surprised that every country or every major country in the world will start thinking of a stablecoin of its own, not just private blockchains that have its own stablecoins. The significant SEPA trade agreement between UAE and India, for example, the previous topic that we spoke about. Sorry, there's a lot of some sort of a discussion noise in the middle. If they could please go on mute, that would be great. Thank you. If we then go into other areas where we understand and implement this into our e-invoicing systems, where not just OCR-based invoice recognition and invoice accounting and payment channels make it easier for us to settle payments on a easier, faster route. But imagine working capital management, even a half a day better working capital management can lead to that much more yield and that much more implementation of resources in our businesses across the board. So what we're seeing now is the beginning of stable coins, in my opinion, although it's been close to a decade that we've started seeing some sort of crypto currency and modes of transfer of value across the board. I think more and more as sovereigns adopt this structure and we move into standardization of this metric across the board, I think we should start seeing an innovation becoming a normal day-to-day transaction, therefore becoming more affordable, more available to everybody, and therefore make it easier and significant part of our lives going forward. Back to you. I'm done.
Thank you, Vinay. One thing like that clearly, emerges that from discussion is that the future isn't about replacing one payment trail with another. It's about creating optionality. It's about selecting the right trail at the right time for the right corridor, and that's exactly what our next segment focuses on. We have discussed compliance, settlement infrastructure. Also, now let's look at execution. How do organizations actually navigate multiple rails while maintaining visibility, compliance, and cost efficiency? To answer that, I would like to invite Shubhankar Roy for a live demonstration of Finigenie's multi-rail intelligence platform. Shubhankar Roy will walk us through, how organization can evaluate different payment rules, routes, also then compute compete settlement windows, optimize payment execution, and across borders. So Shubhankar, what do you?
Thank you, Barsha. Thank you for the invite and for arranging this. And I'm really glad to be with Dr. Bhaskar, Renil, and Devika to be a part of this conversation. I mean, this has been a day in and day out of discussion now, always like how to move money. I mean, obviously for treasurers, for economists, and especially for the businesses. I mean, that's where the whole the most of the time we spent. Uh, so and thanks to the attendees and the people who have, I'm sure that many corporates and people who are interested to go through it, and so so all this time we have been hearing from Dr. Bhaskar and Renil that it's being, the policy is being taken up, how the transformation has taken, and how the capital is being moved. So it's more like and how the concept has been getting into the reality. Now, I would definitely love to take you through the execution seat, that how execution wise it's possible, what is being done. So because that's the question to the every finance team, actually it's not about like whenever the point comes that how to move money, it's not about that what rail exists. The question has become now, which rail is going to be the optimized way. So the all these days now, this has been a decision the CFOs, the treasurers has to take manually, that which rails to take, and they have to do the lot of their back calculations and to check out that okay, this is going to be the optimized way to do this. So this, I think the scenario has changed on 2026. So right now, what we are doing, it's now all the rails, making it available in a single place, and then let the system decide on how and which is the most compliant way, like how we have seen. So what I mean here is, in a compliant way, basically it's not only the cost, it's also the velocity, and which depends on the various factors like the invoicing format, the regulation, the corridor which you are moving it. Because this is not about a single country. When we talk about cross border, it's about the two different countries who have two different jurisdictions. So India's RBI wants to protect their sovereignty in a different way. However, the UAE wants to expansion in a different way. Now, where this matches comes in, where do we plug in so that as a business or at the money movers, how we going to take up that advantage? So this comes to be what exactly we have been done. It's like in terms of we have created this platform so that which is not into the concept. This is what is really we are doing it. So initially I would like to talk about like how what does it this buzzword like stable coins, for so many people, we are still a little bit of confused. It raised our eyebrows that okay, what this stable coins is. So this is not a confusion anymore. This is not a Bitcoin or something. This is something is pegged with a stable currency. Presently two currencies, which is USDC and USDT. which has been already been approved by UAE, and definitely the government has taken the that part, that how these two are the legitimate ones to move the funds. So basically here we would like to say that let's take an example of a company who is situated in UAE and they have a suppliers there back in India, so which is a very common corridor and is being evolving up like very largely after the government has made some uh, joint what do you call the discussions, and this is being seen that this movement of fund is not only dependent on the single point. So right now, let's take an example of a UA company who wants to move fund of say 500,000 US dollar to India. So presently you have an what we are doing it, we are just going to our bank, we are checking the what's the bank's rate, then we are submitting all our invoices, documents and all these things, and then banks decide on it. Okay, this is going to be your forex rates, this is going to be your transit time. We don't know in between someone who will as an intermediary bank gonna move the fund with whom we have not discussed the hedge rates or nothing. And finally, when the supplier in India who is receiving the fund, they are also not noted how much exact money I'm going to receive after we get paid from my UAE buyer. So these are the questions are still it's there when a regular businesses wants to collect the payment. So that's the reasons I think stable coins has played a very important role. What I would like to say, the stable coins has made money programmable, where money has its own rules, at when it travels, how it travels, how much cost it receives. So just to give you a brief of these things, if you add up these all factors that I talked about, like the forex rates, the velocity, the intermediary charges, you imagine these transactions takes almost 4 to 6%. So these are not 4 to 6% of fees. This is the 4 to 6% of the whole transaction. So if you are making, for example, in a year, if you're making $100 million of transactions, so 6% of the money you have already lost in this, and then the consequences of the invoices and all these things, which is actually affecting your velocity. So giving that context, what if is presently that all my eminent speakers was talking about? This is no more a concept now. We are doing it. And this is actually live, as Dr. Bhaskar has rightly said. Some of the common corridor like UAE, Hong Kong, UAE, India, UAE, Pakistan, these UAE, Turkey, these are the corridors which are rapidly adopting this part. Going back to the next, like how now this is possible, like how exactly we can move money via stablecoin. So, when it comes to stablecoin, I would like to give you a concept. It's just very fiat. So fiat, which is definitely our currencies like USD, INR, AED, and then the stablecoin, which is again pegged with these stable currencies only. So first part, when it comes that when we need to convert the fiat into the stable coin, that process is called as on-ramp. So generally in on-ramp, it's very simple. What we are seeing in the screen is, so when we click this, so first thing is just taking the live rate, like how much stable coins will I get if I pay X amount of money. So for example, I need to pay 10,000 US dollar, and that money I will be sending through UAE FTS because I'm transferring from my UAE company. And if it is say how much USDT, so that's a dollar pegged stable coin, which is the popular one, and which network it belongs to. So let's take an example of Tron, which is again a very popular network. And then when you give this is how the live you get your the rates. So if I pay right now 10,000 AED, I will be getting at 2669.84 USDT in this. And in details, if we click, you will get to see, okay, what is the fees generally. So so this is the exchange rate. This is the total the money transfer gonna charge me, and that's it. So this is the created one, and that's it. Once we are agreed with this part, then we can just click on the send funds, and that's it. So that we put our wallet address. So this is what, like, if we already have our unique wallet address for the stables, and give it, we execute the transfer, you receive the fund in no time in your wallet. So that's how this is compliant way, like, because now this is not handled by Finigenie alone. Why it is being Finigenie is handling is possible because this is being handled by the regulated partners from different countries. In UAE, it's like VARA, the ADGM registered, who are compliant to convert fiat into stable coins. And for the other countries, like for India, we have the other compliant partners, especially the banks and the institutional money institutions, who can do the transfer from dirham to this INR. And when we put all these things together, so that creates a value chain and the experience becomes wow, that you put money in your UAE dirham, from your dirham account, the money gets converted into your stable coin, and then the same amount of stable coin amount, you will get to see that this is what exactly your Indian supplier will get it. So moving to the next part now, suppose, as I was talking about, I being a UAE company, how I am that I am moving 10,000 of my US dollar to this, and I need to pay my supplier who is sitting in Mumbai. So this is how I just select the country. So first of all, we need to add that, I mean, just how we do it in our normal banking method, like how we add our local banks. So here also we just select the country, India, and here is the list of all the bank comes in. So whichever banks the suppliers is having his account, for example, I'll take the HDFC here. That's it. So this is how it will come, and then you have to mention whether it's a savings account, whether it's a current account. That's how the India looks like. I'm sure most of our residents, they know it, and then that's it. And then we do the whitelisting of this bank account. So it's what we mean here is whitelisting is like the adding up of the bank account, which is now whitelisted by the regulators and the regulated partners. Now, once it is whitelisting is done, then it's just so simple. We just need to select how much money we need to send to our supplier. So we go to this part, and then, yeah, definitely we need to select from which country we are sending the money, which is dirham, and which is the receiving country, and say we want to send 10,000 INR to our Indian supplier. And then here we just need to mention the source of funds, and then we have to give the mobile numbers, and that's it. And then we have to create the code. And this is what you get. So to pay your 10,000 INR, you just need to pay 106 a USDT coin, which you have already converted through UAE. Right? So this just get a fraction of a second, and that's it. And then you transfer the coins to this, again, this regulated wallet, and transfer is done. It's just 5 minutes sitting in UAE, middle of night time, 1 p.m., your money is transferred to your Indian supplier. And your Indian suppliers get the notification that his money has been paid. So it doesn't end here. Apart from that, now, the Indian suppliers, they need also the FIRC, because that's the RBI's rules that once if you receive the remittance from outside the country, you need to report to the FEMA and all that. So the bank, because this transaction has been done into the bank, and The regulation wise, definitely Dr. Bhaskar and Renil knows these parts more better, that what exactly we need to submit to the FEMA and to GSTs and all. So this FIRC certificate is being issued by the bank, because this transaction is being taken care by the regulated bank in the India end and also in the UAE end. So this is totally a compliant channel of the transfer. So what we have seen, in fraction of second, we have made the transfers, totally controlled. We have the whole trail of the money, the source of funds, where it is happening, and how the money is being moved. There is no intermediary bank in between. There is no excess charges, no submission of excess documents. It's just the invoice, and that's it. And the money has been moved from one country to another country. So that's what brings. I would also like to draw some attention from Dr. Bhaskar and Renil, that definitely, what do you think about these things and the transfers, and what do you think, how the adaptability and what kind of confusion probably the people who are moving money they still have on the stablecoin movements?
So, if I may go first, I think this is an absolutely amazing system. And I say it not only because of the demo that you've given, but also because of other people who have used the system and have given me inputs on what is achievable. Even the rates that we can get when we convert are significantly better than what we can get outside. So I think if this exists in the life of another finance professional in the region, it would generally change the way they interact with money and their banking relationships. So well done, Roy and team.
Thank you, Renil. Thank you for this. Up to you, Dr. Bhaskar. In the lens of regulators.
Yeah, I mean, I'm cognizant that sort of, we don't have that much time, and I do have a propensity to keep talking. So I'm just going to be very, very blunt. Look, I'm an ex-banker myself, and I've been running SMEs since the last century. And whilst the big corporates are able to actually have people and they have the capital to handle this as well as the cash, smaller companies, SMEs, medium scale enterprises, they don't. They desperately need simple, straightforward ways to make their payments, their treasury functions, their finance operations easier. And this is the reason why I believe, Shavankar, what you and the team have done is a beautifully very efficient way of, broadly speaking, cash management. Okay. And more we make it easier, the better it is. And that's how we add value. Nobody wants to have problems in cash management. Literally, I keep on challenging everybody, saying we have to get to a stage that in the old days you would hand over a coin and that was it. We have to get to that stage. We have to get to a stage that payments happen that easily. So all the invoicing, all the requests, all the onboarding, all the processing, we literally need to get to that stage. So I think what you're doing is pretty good and amazing. Thank you.
Thank you, Dr. Bhaskar. Up to you, Varsha.
Yeah, thank you, Shubhankar sir, for that insightful demonstration. We have spent the last hour for discussing compliance, settlement infrastructure, stablecoins, treasury strategy, and payment orchestration. Now I would like to bring all the speakers together for what is often the most interesting part of my executive discussion, the panel conversation. This section is designed for direct, forward looking, and to be honest, we want real perspective from our speakers on where cross-border trade and payments are heading right now. I'll ask each speaker to keep their responses concise, around 60 to 90 seconds, and so we can cover as many as perspective as possible. Okay, so let's begin. So first question is, will stablecoin be absorbed into the correspondent banking system, or will they ultimately root around it entirely within the next 5 years? Dr. Bhaskar, I would like to start with you.
So I think my feeling is that banks and financial institutions will have to have a multi-channel approach. So, for example, tokenized deposits will be used for interbank transactions. Stablecoins will be used for corporate transactions. CBDCs will actually surround the entire ecosystem. What's going to happen in 5 years? I don't know. I really don't know. But with agentic AI coming in and then slightly longer quantum computing, it is my belief that if anybody, a digital archaeologist had to look and listen to this particular webinar, they will think we are living in the Cretaceous era or with the Neanderthals. That is all that I can say. It's going to change rapidly.
From a policy and sovereign risk perspective, are stablecoins becoming part of the existing financial system, or are they building an entirely new one?
Now it is part of it. There's still places where you need to interact with the older one, and people are using it. So I don't think it's going to replace, not yet. There'll be multiple rails, multiple products. There's a fragmentation that is going to happen. It's not going to be a one-to-one replacement.
Dr. Bhaskar. Renil, what's your view from the capital allocation side? Would like to know.
Well, it's one of those things where you cannot really allocate capital. But today, when I look at it, you can obviously be part of the ecosystem where you invest into it. You also need stable coins and effective means of moving capital across geographies, which is quite a tedious task, if you ask me. It takes 2 days and hundreds of thousands of dollars to just move money from one geography to the other. And then unending conversations with relationship managers, bankers, cross-checking whether it's rightly done or not, and then sending off Swift trails. It is such a waste of energy and time, right? Crypto and stable coins will become the currency of AI. AI agents will not have the time to go through the same process that we are going through as human beings. So when the system becomes all streamlined, stable coins will be used for all payments. There'll be no Swift. And I'm making this as a massive statement today, but that's going to be the future. And when I hope after Dr. Bhaskar's comment about somebody looking at this in the future, they look at my comment and say, okay, these guys understood a little bit of what was the reality.
Thank you. Devika, from a legal and compliance perspective, what do you think that regulators, ultimately prefer?
Sorry, I didn't hear the last part. Regulators ultimately
Prefer.
And from a sorry.
From a legal and compliance perspective, what do you think that regulators ultimately prefer this? Stable coins and everything.
Definitely. I think you heard both a finance professional and an ex-banker talk about it. One few pointers that I think we need to be quite mindful of. Regulators, like us human beings, they also are well abreast to and would like to be on top of things, such as that certain regulatory framework, and the policies takes time. So definitely, to answer your question, yes. They do prefer, and that exactly goes back to one of the examples Dr. Bhaskar mentioned about 4 stable coins and the 5th one getting approved by the regulators out here in the region. The only question that I as a lawyer keep asking and talking to my clients about is, of course, one jurisdiction is always well positioned compared to the others. In UAE, I believe ticks most of the boxes from ensuring that we have the regulatory framework, the leadership. Let me start to say that leadership has a vision. They, like Renal mentioned, understand how and what the future holds and what needs to be implemented. So it's a vision combined with a regulatory support and an evolving legislative and a regulatory framework that is making this entire ecosystem and revolution, if I may call, happen. So yes, definitely. I believe regulators are comfortable and very happy about the way forward.
Thank you. And moving to the next, Renil, this question is especially for you. Most organizations evaluate settlement corridors as operational decisions, but you have argued that they should be viewed as capital allocation decision. Can you explain the difference? Like, what are the changes when a CFO begins evaluating settlement through the lens of capital strategy rather than payment operations?
See, I'm of the strong belief that every dirham, every rupee, every dollar has a significant value to the organization. So where you decide to park that rupee or find a home for that rupee significantly impacts in the long run how you view the structure of the organization, how you fund it for your future operations. So it's not just about cross-border selection, it's also about capital allocation because at the end of the day, we're all dealing with money, right? If you're transporting people or cattle, then it's a completely different discussion. But if I can get my money where I want it to go within like a few seconds, that is a saving of at least 48 hours in today's terms, right? And 48 hours at a 5% yield on $1 million is a significant amount of money, right? I'm just thinking about it from those perspectives. And here we have enterprises that move tens of billions of dollars in a day, and 48 hours is hundreds of thousands of dollars for that 48 hours. So you understand the scale at which we are now talking, right? Money moving across the globe, it only benefits the intermediaries at this point in time. We're trying to come up with a scenario where the end user and the originator benefit from this position.
Okay, so Dr. Bhaskar, would you agree that treasury infrastructure is becoming a boardroom discussion rather than a back office discussion?
Totally. Totally. This is what I'm trying to say is that the meaning of money is changing. And for a corporate who looks after the money, it's the treasurer. Money itself can be programmed now. So I'm afraid the life of a treasurer is going to get far more interesting. I know they keep on trying to make it less interesting. They want to keep it very boring, but I'm afraid not. Treasurer's life is going to get really, really interesting. And the smart people will actually be running a business. They will be running a treasury business. Their business is making money out of money.
Okay, so let's move to the India UAE corridor has become one of the most discussed trade and payment corridors in recent years. So, but it is the most strategically significant capital flow corridor in the world today. Or is there any other corridor that deserves more attention? Dr. Bhaskar, let's start with you.
So in terms of what I would call as stablecoin or digital assets corridor, you have to evaluate them from 2-3 perspectives. One is the size. So that's where the India corridor is pretty impressive. But besides that, the other corridors with, for example, Lebanon, Egypt, Turkey, Africa, China. These are pretty big, hairy corridors to worry about. The second thing that we need to worry about, something that Renal alluded to, are what I would call as investment corridors. And that's where Europe and US, UK, Japan, and again, going back to China, they come in, as well as India. So these are the big chunky transfers that happen. And the last piece, which is where the most interesting pieces are going to be there, is, for example, how are the new ways of transacting or payments going to come in? So, for example, both Abu Dhabi and Singapore are two jurisdictions which have signed up to the MLATR regulations of electronic commerce. And if at some point in time, one particular corridor cracks the problem of KYC, AML, and joint recognition of both the receiver and the sender, they are going to absolutely make money like crazy. So as I keep on saying, we are privileged to be in the UAE. We are in the heart of transfer land across so many countries, so many corridors, so many products, so many institutional players, that it's a great place to be in.
So Rinal and Devika, would you like to add something on this? What's your point of view?
I think,
Sorry, Devika, please go ahead.
no, sorry. I think I was just going to say that Dr. Bhaskar covered a couple of regions, but just to add to that, I would say the UAE Africa corridor, and especially the East Africa, is something that I would definitely want to highlight. So while India and the UAE India corridor set strategically very significant, the volume, the base, there's quite a lot of changes happening. There is an infrastructure gap, which I believe is slowly and over a period of time going to be plugged. But I think from a UAE Africa corridor, the reason why I wanted to highlight this is because it's structurally still in its nascent stage. So it's being built from scratch, and I am pretty confident and would like to believe that that's going to definitely take off, and which would be easier for the UAE Africa corridor to actually build and be shaped. That's it. Renal, over to you.
Thank you, Devika. I completely agree with Devika. I think we are at the beginning of the revolution where AI agents are just getting started. And they will invent their own currency that will work with the stablecoins and ensure that we can all participate in this revolution. And it's going to change the world in ways that we can't imagine right now. It's like the advent of the internet or the finding of the first personal computer or the mobile communication device. So I think the future is going to be very bright and colorful, and we'll have a lot more activity and a lot of things happening at very fast pace going forward.
Thank you all. And my last question and final question would be, I would like each of you to make like one prediction on record by December 2026. What will be the single most significant structural change in how institutional capital move across borders? No hedging, no, like it depends. And just one prediction. I would start with Dr. Bhaskar.
I would say that I think for the first time, you will start seeing institutional adoption of two things that hasn't been seen before. One is tokenized deposits, and second is CBDCs, and that is from the UAE. I think people are going to be quite surprised this time next year to see what changes have happened.
And Renal, Devika, and Shubhankar Roy, what's your point of view on this? I would like to know.
I already made a massive prediction that this will become the currency of AI, but I would also like to add that geography will stop mattering for KYC going forward. With the new system, you can be based anywhere in the world and do business in anywhere in the world, and KYC will be geography agnostic going forward.
Devika and Shubhankar Roy?
I think I would concur to what Dr. Bhaskar said. It's going to be the rise of the regulated tokenized deposit. So I think the debate that we had about whether corporations would bypass banks or would, whether by bypassing by USDT or USDC, I think that's no longer a debate anymore. It's accepted. I think these larger corporations, the institutions are going to adopt, and there's going to be a rise of these commercial bank deposits. And like Ranal said, it's going to be colorful times ahead.
And Mr. Roy, would like to know your point of view as well with this.
So as we have seen, yes, exactly. So especially what recalls me, the programmable money, which is actually possible today, and making it programmable, putting the terms and condition into the money itself. I think by end of the December, we get to see the more and more terms and condition. It's the money will choose in which pocket I should keep, or I should stay rather than, and some more changes I can see that especially in the trade formats, SMEs are being liking and adopting it heavily into this kind of payments. The other segment that I have seen in UAE, Pakistan, that the freelancers, because as we know that from Pakistan, there are a lot of freelancing things are happening. The third part is definitely the Philippines, where the largest remittances, the home remittances are happening. So this volume share being shifting, and I can see that the is being shifting very hard, because with this generation changes or something, because as Dr. Bhaskar has earlier said, that these days, these generation, I don't know, my daughter will ever see this plastic note or like this. So for her, it will be just like a digital device, which is like sending across the money. And yeah, so that's adaptable. And I think the more and more adaptability we will see. And on the regulations perspective, I have seen the RBI especially, which is one of the stringent CBA, is not unlike UAE, is not like UAE, but even they are also taking some massive stands now. And in recently, they have regulated few flows from Gift City, and that's a commendable steps, which has really make life easier for Indian businesses on the collection of money and then the cost. So yeah, I think there will be definitely some significant changes we get to see on December's.
Thank you, everyone. As we wrap up, what makes this decision particularly valuable is that we have looked at the future of cross-border trade for every different perspective: policy, treasury, also compliance and infrastructure. Yet a common term has emerged that throughout today's conversation, the future is not simply about moving money faster, it's about moving capital more intelligently, and it's about reducing friction across compliance, settlement, and treasury operation. And it's about creating the infrastructure that gives businesses greater visibility, greater optionality, and greater control over the how capital move across borders. And those organizations that adopt early, it will be benefited from the changes already underway. And on behalf of Finigenie, I would like to sincerely thanks to Dr. Bhaskar Dasgupta, Rinel Rao, and Devika Ravindran and Shobhankar Roy for sharing their insight with us today. Time is very short, so yeah.
So Varsha, I just see there is a one hand raised, I think, from Robbins. If he has any questions,
Yes.
just one or two quick questions we can.
So
Yeah.
Robin can ask the questions as I have given this access.
Yeah. Good evening, Basa. Actually, can you hear me?
Yeah, sure.
Yes, we can hear you.
Yeah. So actually, we have developed a system for to support the NRI clients to maintain their properties. We had around 200 plus services we recorded actually. So for that, we are planning escrow system payment plan. Does this plan will help us for the payment process from other countries?
So, Robin, so you mean to say that you are planning to adopt an escrow system, right, for your the new business that you are in?
Yes.
Okay, cool. So, I mean, my view into it is like, as we have seen into this, like, definitely the money has moved to a programmable way. So all escrow means here it's give the benefit of the putting the condition on the movement of the money. So that's how, like, in the fiat we have this escrow system on it. So there are definitely in 2026 there are other ways, as we have seen, and as we have seen how the world is being moving. So if you would can because this we are limited on time, but on a one-to-one, if you can let us know what exactly the terms and condition you want to have with your buyers or the suppliers in the movement of money, so that can be implemented into the system. And then whether it's an escrow movement, whether it's a stable movement, whether it's a value movement, how this could be this could be then decided based on the best thing to do. Yeah. So that's my view on it. And yeah,
Yeah, definitely. We can have a one-to-one call. Thank you all.
thank you, Ravina. So anyone, I don't think so. Yeah, there's no more hand raise. Yeah.
Yes, yes.